What's up, guys? This is Manoj Bhaktani. I welcome you all on behalf of the Edupedia world. It's been a wonderful morning today, and I'm sure that you guys are enjoying your day to the fullest, your life to the fullest, like as usual, like as always. You guys are always excited, huh? Good, perfect. So guys, in our last presentation, I did discuss with you some of the relevant topics relating to the chapter Audit of Consolidated Financial Statements. This is a second video presentation in which I'll be covering a few more topics before concluding the same in our forthcoming presentations. So, are you guys all set? Perfect, guys. Are you like revising your topics time and again, like promised? Like, are you like honoring your word of making regular and recurring revisions? If not, please don't do it on time, because that's going to ensure that you guys don't flunk in your CA final examination, guys. Perfect. So with that hope, belief and enthusiasm, just sit on the edge of your chairs, fasten up your seatbelts. We are about to take off with the first topic of the day, and that will be the relevance of SA 200 and SA 600 while auditing the consolidated financial statements. So guys, we all know about this particular stuff, that SA 200 is basically about the basic principles governing an audit. It has been like stated. Okay, so what all is expected out of us, we the auditors, what all the company basically for whom we are basically doing our audit stuff, what all that particular company and the Institute of Chartered Accountants of India expect out of us during that particular audit. So there are a few things which need to be kept in your mind while you go for any of the consolidated financial statements audit. Number one, that whenever you as an auditor delegate your work to your assistants, or basically use some of the work which has been performed by some other auditor or expert, then that particular auditor shall continue to be responsible for forming or expressing his opinion on the financial information. If you have like delegated some of your work to the assistants, or you got the work performed by other auditors or expert, that doesn't mean that you won't be held responsible now at all. That's just not the case. You will be, and you will continue to be held responsible for forming and expressing your opinion on that financial information. So forming up and expressing your opinion for that particular stuff, an auditor will remain responsible even though he or she may or may not delegate the work or get the same work performed by other auditors or not. Number one. Second, having said that, that doesn't mean that you don't need to rely on the work which has been like performed by other auditors. I'm not saying this at all. Okay, there is a difference between two stuff. You will continue to remain responsible for forming and expressing your opinion. However, having said that, you will be entitled to rely on the work which has been performed by others, provided that you exercise adequate skill and care, and you are actually not aware of any of the reason to believe that you shouldn't have relied. So you can rely if you have got like each and every kind of genuine instance that okay, you can rely on his work. He is a professional, competent person. He is also a member of the Institute of Chartered Accountants of India. So you can rely on the work which has been performed by others. And the third most important thing is rely in forming an opinion in case of independent statutory appointment. So in a case of any independent statutory appointment to perform the work on which the auditor has to rely in forming his opinion. So for example, you got a work with some of the branch auditors, okay, who have been like appointed, and you are the principal auditor. So certainly you will have to like rely on the work which has been done by the branch auditor, you being the principal auditor, and the auditor's report shall expressly state that fact of such reliance, that we being the principal auditors of that bank which has been appointed by RBI, we are relying on the work which has been done by different branches auditors. So you need to have that kind of faith, and you can rely in forming an opinion in case of an independent statutory appointment. That's all about SA 200. SA 200 talks about so many things, but I am just covering that particular stuff which is being related with consolidated financial statements. So one, you will continue to remain responsible for forming and expressing your opinion. Number two, having said that, you can rely on the work which has been performed by others. And third, you can rely in forming an opinion in case of independent statutory appointment as well. So that was all about SA 200 with respect to auditing of consolidated financial statements. Now, coming to the second part, that is SA 600, using the work of another auditor. So guys, if I'll talk about SA 600, using the work of another auditor. So, if in case you have been appointed by some of the regulatory authority, be it RBI, be it SEBI, and you are the principal auditor, okay. If you decide to use the work of another auditor in relation to the audit of consolidated financial statements, then in that particular case you will have to comply by the requirements of SA 600. Why? Because obviously you are using the work of another auditor, so SA 600 is going to apply in your situation. So you need to follow a few points which are relevant in your case. Number one, no requirement to consider the professional competence of other auditor if he or she is a member of ICAI. You can trust them up. Don't worry, they are your brothers and sisters. Go ahead with that. Okay. So when you're planning to use the work of another auditor, then the principal auditor is not required to consider the professional competence of the other auditor if the other auditor is also a member of the Institute of Chartered Accountants of India. Number one. Number two, perform the procedures to obtain sufficient and appropriate audit evidence. The principal auditor, that means you, should perform procedures to obtain sufficient and appropriate audit evidence that the work of the other auditor is adequate for the principal auditor's purposes in the context of the audit of consolidated financial statements. So you need to perform those procedures which are adequate in order to obtain that sufficient and appropriate audit evidence. Number three, work to be performed by principal auditor. So whenever the next time you think about like using the work of another auditor, then you as principal auditor should first of all determine the information and assurance which is required from that particular other auditor. This basically precludes the principal auditor's determination on how the work of other auditor would affect the audit of CFS. For example, the information which is required from the auditor of a subsidiary would be different from that which is required from the auditor of a joint venture. Obviously, these two persons are absolutely different. One is auditing a subsidiary, okay? One is auditing a joint venture. So the kind of information that you require from both these people will be different. Absolutely depending upon the nature of the work and the services they are performing for two different entities. That's number one. Number two thing, advise the other auditor of the use that it is to be made for the other auditor's work and report and make such arrangements for coordination of their efforts at the planning stage of audit itself. So it should be clear with that particular stuff. Then the principal auditor should inform the other auditor of the matters such as areas requiring some special consideration, procedures for the identification of some inter-component transactions that may require the disclosure, and the timetable for completion of audit. So you need to ensure that the other person knows the entire plan and timing of the audit itself. And lastly, the principal auditor should advise the other auditor of the significant accounting, auditing and reporting requirements and obtain representation so as to take care of the compliances with them. This will constitute the work which is required to be performed by principal auditor. That is number three stuff. Now coming to the conclusion part of SA 600 as far as the consolidation of financial statement is concerned. So there is no requirement to enlarge the scope of audit of separate financial statements subject to some condition. So while you are planning to use the work of other auditors, the principal auditor should not enlarge the scope of the audit of separate financial statements of a subsidiary or component which is likely to be included in the consolidated financial statements unless such auditor or maybe such other auditor are specifically appointed for that purpose. Thus, I can simply say that the instructions that are issued should be confined to the other information which is required for consolidation itself. So you don't need to have the enlargement of the scope of audit for separate financial statements subject to that one condition. So this was all about SA 600, using the work of another auditor as far as this thing is concerned with the consolidated financial statements. I hope I was able to make you clear with this particular stuff, SA 200 as well as SA 600. Perfect, guys. Let's move to the next topic, and that will be the major audit considerations while auditing the CFS. So this same part is being divided into three different components, three different aspects. Number one, recognition of the components. Number two, accounting aspects. And number three, general audit aspects. So these are the broad classification wherein we'll have to understand what are the audit major considerations we need to understand while auditing any of the consolidated financial statements. Recognition of components will cover, number one, identify the components which are likely to be included that CFS, be it subsidiary, be it associate, be it joint venture, but you need to understand and identify those components which are required to be included in that consolidated financial statements. Number two, you need to evaluate of their ownership control. So whether the same is likely to be like covered under the category of a subsidiary, or same belongs to the joint venture or something else. So you need to evaluate that ownership control on that stuff. Next, you need to be aware of what all are the components, what all are some of the subsidiaries or joint ventures or some other stuff, some other associates who need to be excluded from the list of the entities which will be included in the consolidated financial statements. So what are the name of those components will be excluded. So that's again a category. Number four will be the evaluation in the changes in ownership. So you need to evaluate a few of the changes in ownership as well. So lastly, you were having some of the like 50% control in a joint venture. Now you have like around 60% in that. So what all is going to get impact on whole that for that. So what's going to be the evaluation of those changes in ownership. So all these four broad categories will be covered under recognition of components. Identifying the components, evaluation of ownership control, exclusion of components, and evaluation of changes in ownership. So this is something which I told you in a brief nutshell, okay, that what are we going to study. So don't worry about this thing, we'll be studying this particular stuff in detail. So my next slide will help you up in analyzing as to what will be broadly covered in recognition of components. Number two, that is accounting aspect. So we'll be covering this accounting aspect related thing in my next forthcoming presentation. So wherein we'll be talking about in detail with each and every item of here. So be it permanent consolidation adjustments, be it current period consolidation adjustments, be it compliance with the accounting standards, impairment loss on goodwill, negative minority list, difference in reporting dates, notes on accounts, and disclosure. All these things will be covered in our next presentation. So you'll have to stay tuned for that matter. And be it about talking about this general audit aspect, be it planning, managerial representation, and reporting obligation. All these 3 points will be covered in this particular presentation itself. So perfect, guys. Let's mark the beginning and discuss and understand the major audit considerations which are required to be dealt with while auditing consolidated financial statements. Let's mark the beginning with recognition of components. So recognition of components for CFS purposes. I just briefly made you understand about these four aspects, be it identifying the components, evaluation of ownership control, exclusion of components, and then finally evaluation of changes in ownership. Let's understand the first thing first. So let's start with identifying the components. So number one, the responsibility of a parent to consolidate all its subsidiaries. So a parent which presents the consolidation of the financial statements is required to consolidate all its subsidiaries and include all the associates and jointly controlled entities in the CFS, other than those for which exceptions have been provided in the relevant accounting standard. So guys, first thing is clear that it is primarily the responsibility of the parent company, okay, to consolidate all its subsidiaries. That's number one with respect to the identifying of the components. Number two, the auditor should obtain listing of subsidiaries, associates, and joint ventures. So the auditor is going to take care of all the listing of subsidiaries, associates, joint venture which are included in the consolidated financial statements. So that's the job of an auditor. So you as an auditor need to obtain that listing. You need to first go to that management personnel and ask them up, okay, what all are the subsidiaries and associates which have been like included under the list of while merging the consolidated financial statements. So they'll provide you that. Number 3, auditor should review the information which is being provided by the management. So as an auditor, it is your responsibility to review the kind of information that is being provided by the management of the parent, identifying the subsidiaries, associates and joint ventures. Number 4, verification by the auditor. So the auditor should verify that all the subsidiaries, associates and joint ventures have been included in the consolidated financial statements unless a subsidiary, associate or joint venture meets the criteria for exclusion. So the same is being will be provided with the relevant accounting standard. So it is the duty of auditor to verify that thing. Number 5 will be the procedures which are required to be performed by the auditor. So guys, in respect of completeness of this particular information, you as an auditor should perform a few procedures. Number 1, what you will do? You will review the work papers of prior years for the known subsidiaries, associates and joint ventures. That's number 1. Number 2, you will review the parent's procedure for identification of subsidiaries, associates and joint ventures. You need to know as to how they identify that this is my subsidiary, this is my associate and this is my joint venture. There could be a case that wherein the subsidiary might be classified into associate or associate might be classified into joint venture. So whether they are actually applying the conceptual rules while framing that okay, this particular stuff is subsidiary, this is associate and this is joint venture or not. So you need to be aware of that. Number 3, you as an auditor will review the investment to determine the shareholding in other entities. That's your need. Number 4, you will review the joint venture and other relevant agreements which are being entered into by the parent. You need to be aware of the kind of agreement which is being done. So it is your responsibility as an auditor to review that whether the joint venture and other relevant agreements have been made by the company on time or not, whether the same is being maintained or not. And then lastly, it is your responsibility to review the statutory audits which are being maintained by the parent. Let's suppose there are some of the registers which are being kept under the Companies Act. So you need to have those registers, the amount of loan which is being paid, made and received, the amount of investments which are being made and received, the amount of security which has been provided, the amount of guarantee which has been provided. So all these registers need to be maintained by that company. So it is your responsibility as an auditor to review that whether such statutory records are being maintained by the parent or not. So this will be covered under the procedures which are required to be performed by auditor. With this, the first segment, that is the identification of the components, is complete, and I hope that you guys got the complete understanding with relation to that stuff. So it is the responsibility of parent to consolidate all subsidiaries. It is the responsibility of auditor, while he should ask for the obtainment of the listing of subsidiaries, associates and joint ventures. It is the responsibility of auditor to review the information which is being provided by the management, and it is also the responsibility of auditor to verify whether the same thing which is being provided to them are genuine enough or not. And finally, as an auditor, you need to perform some of the procedures. That's all with respect to identifying of the components. Moving to the next major headline, so that major heading, so that's evaluation of ownership control. So what do you understand by evaluation of control, ownership control? Let's understand them into these 3 points. You need to first check as an auditor that whether the parent controls the composition of the board of directors or not. So as an auditor, you should verify whether the parent controls the composition of board of directors or corresponding governing body of any entity. Such control would also necessitate consolidation. So evaluation of that ownership control will be first of all done by this thing. Next, as an auditor, you need to have that kind of verification of board's minutes and shareholders agreements. So the auditor must verify the board's minutes, shareholders agreements which are entered into by the parent, agreements with the entities to which parent might have been provided any kind of technology or know-how or any of the enforcement of the statute, to see whether such kind of control has been obtained or not. So it is your responsibility as an auditor. And finally, that professional judgment, guys. So as an auditor would have to use his professional judgment to determine whether the parent controls that composition of board or board of directors of any other entity or not. If yes, then he has to see whether the entity has been consolidated as a subsidiary in that CFS or as some other concern, maybe associate or joint venture. That will be your professional judgment. That was all about evaluation of ownership control. Check whether the parent controls the composition of the board of directors or not. Verify the board's minutes and shareholders agreement, and as an auditor, use your professional judgment. Perfect, guys. Let's move to the third heading. That will be exclusion of components. So guys, how will you identify what all are the components which needs to be excluded? So where a subsidiary, associate or jointly controlled entity, that means joint venture, is excluded from the consolidated financial statements, you as an auditor should examine the reasons for such exclusion as to whether the relationship of parent with the subsidiary, associate and joint venture is intended to be like a temporary one or not, or the subsidiary, associate or joint venture operates under several long-term restrictions which significantly impair its ability to transfer the funds to the parent. So there might be a case that there are some of the harsh kind of conditions which have been applied to that joint venture, under which it is actually operating. You are having some of the joint venture with a company based out in Japan, so they might have imposed some of the restrictions. So there might be a case that those long-term restrictions are significantly impair the ability to transfer the funds to the parent. So that might be a case as to why the same joint venture has been excluded from being considered into component, and hence it was excluded from the preparation of consolidated financial statements as well. So you need to find out that answers and reasons to believe that okay, the company's management did completely justified thing. Number one. Number two, in case there is a reason, okay, so as an auditor, the auditor should verify such long-term restrictions from the relevant laws and regulations, agreements entered by the parent with such entities which prohibit the transfer of funds. You need to understand and read those documents, that agreement wherein there has been some of the restrictions or prohibitions being made on the transfer of fund. That is your duty as an auditor. Number three, in case of a reason, okay, you need to believe that okay, something is happening over there. So as an auditor, you should verify the kind of intention the parent is having to dispose of the subsidiary and investment in associates, or making some interest in this joint venture in the near future, which existed at the time of acquisition itself or not. So kindly go through that document, because that's the perfect kind of document which is going to make sure that you read the agreement and you got to know about the things. Next, as an auditor, you should verify the reasons for exclusion which are given in the consolidated financial statements. So you need to aware of the same. And finally, if an entity is excluded from the consolidated financial statements for reasons other than those which have been allowed by the relevant accounting standards, then in that case, you as an auditor should consider the effect on the report which is likely to be issued. Number one, it may have some of the adverse effect, guys, so you need to be aware of that. That is the need to issue your modified report on the CFS or not. So there might be reasons that you were willing to provide clean report, unqualified report, but that restrictions and prohibitions or that regulations compliance which is not being done properly, so it might require you modifying your opinion. So that might be the case. So as an auditor, you should ensure that in the CFS, the investments in such subsidiaries, associates and joint venture is properly accounted as per the relevant accounting standard, that is 13. So that will be all about the exclusion of components. I hope I was able to make you clear with the kind of conceptual clarity which you require. And lastly, evaluation of the changes in ownership. So you as an auditor, first of all, you need to identify the changes which have been happened in the shareholding, okay, that might have taken place since the last audit. Number two, examine the existence of subsidiary, associate and joint venture. So as an auditor, you should also examine whether any subsidiary, associate or joint venture has ceased to be a subsidiary, associate or joint venture during the period under audit itself or not. Number three, verify whether the changes have been appropriately accounted for in the CFS or not. So where the subsidiary might have become an associate or vice versa, there might be a chance, no? your subsidiary getting transformed into an associate, or associate getting transformed into subsidiary. So the auditor should examine whether these changes have been appropriately accounted for in the CFS or not, as required by the respective accounting standards. So that is all about the evaluation of the changes in ownership. Just the kind of brief thing which I was discussing with you in my last slide. So that is the complete holistic picture about the same. So the recognition of components of CFS purposes, identifying the components, evaluation of the ownership control, exclusion of the components, and evaluation of the changes in ownership. I hope I was able to make you perfect kind of clarity with respect to each and every topic over here. Perfect, guys. Let's move to our next topic, and that will be about the auditor's duty with respect to the general audit aspects. So the auditor's duties with respect to general audit aspect is going to get covered into three major parts. Number 1, planning. Number 2, management representation, and number 3, reporting obligation, which will be further classified into 2 scenarios. Let's mark the beginning with planning part. So guys, beware, before commencing any of the audit for consolidated financial statements, you as an auditor should plan your work first of all, to enable you conduct an effective kind of audit in an efficient and timely manner. The auditor should make plans among other things. For example, number 1, understanding of the accounting policies of parent, subsidiaries, or associates and joint venture. First of all, have the clarity of the business, the kind of business that your client is going to do. That should be the first and the foremost thing while you start your audit. You need to understand the kind of accounting policies they are actually have in their place with relation to parent, subsidiary, associate, and joint venture. Number 2, determining the extent of use of other auditors' work in your audit. So you need to make some of the rules, okay, that you being the principal auditor and you want some of the help with respect to some of the branches or subsidiaries. So what will be the extent of that use of other auditors' work in your audit? So you need to determine that. Number 3, determining and programming the nature, timing, and extent of the audit procedures which is required to be performed. So you need to determine and program completely the kind of nature of the procedures that you will be doing, the timing of them, and the kind of extent to which you will be using those audit procedures in your audit. And lastly, you need to coordinate. Okay, so you need to coordinate the work which is required to be performed with your staff members, with your articles, with your other people around with whom you'll be coordinating that work to be performed. So that is all the things, that is all about the things which will be covered under the planning part. Understanding the accounting policies, determining the extent of using the other auditors' work, determining the NTE of the audit procedures, and then finally coordinating the work which is likely to be performed. That is number 1, planning. Coming to second part, that is the management representation. So you as an auditor of the consolidated financial statements should obtain evidence that the management of the parent acknowledges its responsibility for a true and fair presentation of the CFS in accordance with the financial reporting framework which is applicable to parent, and that parent's management has approved the consolidated financial statements. So what am I asking you up? I am simply asking you up as an auditor, you need to obtain the evidence that management of the parent acknowledges their responsibility first of all. Number 2, you as an auditor of the CFS should obtain the written representations from the parent management on a few of the matters which require material to that particular CFS. Examples will include completeness of the components included in the consolidated financial statements, identification of all the reportable segments for segment reporting, identification of related party and related party transactions for reporting. So all these things are such stuff wherein you need to have that written representations from the management, because they are the persons who are going to tell you, okay sir, this will be a reportable segment, okay, this party is our related party, we have been made some of the related party transactions with them. So they are the best persons who can tell you and they'll provide you the written representations for that matter. So you need to obtain those written representations from the management, parent management, on the matters which are material to CFS. That will be covered under management representation. Now coming back to the last point, this is the reporting obligation. So there will be 2 scenarios. One where you, that is the principal auditor, are also the auditor of all the subsidiaries and components. Number one. Number two, you are the parent auditor, but you are not the auditor of one or more subsidiaries or components. So there are many of the people who have been appointed as the auditor for that entity. So you'll have to go by these two scenarios. Let's start with number one. That is, you are the principal auditor, you are the parent auditor, and you are also the auditor of other subsidiaries and components. So what do you need to do? You need to ensure that while drafting the audit report, you as an auditor should report whether principles and procedures for preparation and presentation of CFS as laid down in the relevant accounting standard have been followed completely or not. Number one. Second, in case of any kind of deviation, you as an auditor should make adequate disclosure in that audit report so that the users of the consolidated financial statements are aware of such deviation. There might be a case wherein you observed that the company and the management stooped into some of the level wherein they did deviated from the regular accounting practices. So you need to highlight that in your audit report as a disclosure so that the users of the financial statement are aware of that deviation. Number three, the auditor, that means you should issue an audit report expressing an opinion whether the consolidated financial statements give a true and fair view of the state of affairs of the group as on the balance sheet date, and as to whether the consolidated P&L gives true and fair view of the results of consolidated P&L of the group for the audit under audit or not. So it is your responsibility to issue that audit report wherein you will be expressing your opinion on the complete behalf. Next, where the CFS also include a cash flow statement, then you as an auditor should also give your opinion on the true and fair view of the cash flows which are being presented by the consolidated cash flow statements also. So that will be your reporting obligation if in case you are also working as a parent auditor and you are the auditor who is also responsible for doing the audit for all the subsidiaries and components. That is one scenario. Coming to the second scenario. If in case the parent auditor is not the auditor of one or more subsidiaries, then in that case the auditor of the consolidated financial statements should also consider the requirement of SA 600, which is using the work of another auditor, which we just discussed. So when the parent auditor decides that he will make reference to the audit of the other auditors as well, then the auditor's report on the CFS should discuss clearly the magnitude of the portion of the financial statements which are being audited by the other auditor. You as a principal auditor, let's suppose, did the work of like 40%. So you need to ensure that the other person who has completed 60% alone, or maybe some by like accumulating the efforts which are being done by many of the people. So you need to make sure that that 60% is disclosed in your report, that this percentage of magnitude work was done by these auditors and not you. That should be your responsibility. Number three, this may be done by simply stating the rupee amounts or percentage of the total assets and revenue which is being included in the consolidated financial statements which are not audited by the parent's auditor. However, a reference in the CFS auditor's report to the fact that part of the audit of the group was made by other auditor is not to be construed as a qualification of the opinion, but rather as an indication of divided responsibility between the auditors of the parent and subsidiaries. Since you are telling the people, the users of the consolidated financial statement, that 60% of the work was done by other auditors, that doesn't make you feel not responsible for the activities which are being done by them as well. So we are not like basically dividing the kind of responsibility over here. Okay, so it's merely we are actually like dividing the kind of responsibility over here, but that doesn't change the kind of qualification you'll be having on that opinion. So qualification will remain intact, though this reference is going to make some kind of indication of the divided responsibility between the auditors of parent and subsidiaries. So that's how the reporting will be done if in case the parent auditor is not the auditor of one or more subsidiaries or components. So this was all about the auditor's duties with respect to general audit aspect, be it planning, be it management representation, and be it reporting obligation. I hope I was able to make you clear with kind of each and every evidence and instances wherein you'll be able to get the best of the detailing from our side. Perfect, guys. That's great on your part. Do revise your topic whichever been covered in this particular presentation. I'll see you in my next presentation, but before going, I'll be concluding my presentation with a dose of motivation, and that will be: a failure establishes only this, that our determination to succeed was not strong enough. John Christian Boves was the person who quoted this beautiful quote. So, a failure simply means that our determination to succeed was not strong enough. Had it been the case, our determination would have been very strong enough, we wouldn't have failed at all. And if in case, I'm talking about just the minute kind of failures, minor failures, even if the same things are being happening in your life, you need to have that kind of rock solid determination wherein you can say something to yourself that yes, I am going to succeed one day, and before that I won't quit. I am just not able to say quit. The failure will establish only then if I'll say quit. But I'm not going to say that because my determination to succeed is absolutely at its peak, and I'll make it one day. You need to have that kind of determination in yourself in order to achieve yes, you can do anything in your life. So a failure establishes only this, that our determination to succeed was not strong enough. Get that balls in your hand, buddy, and you'll be able to do that for sure. Perfect. With this, thank you on behalf of the Edupedia world. Keep interacting via questions, queries and YouTube comment boxes. I love to clear each and every kind of query or grievances that you people have. I'll take care of you guys. Perfect. Stay connected.